But I really think that everyone can do 25 to 30% a year with a 10% drawdown.
Today, we are again digging into zero DTE options trading. And my guest is a zero DTE hedge fund manager, and he calls himself Zero Day Mark. He will give you 5 tips for how to succeed as a zero DTE options trader. And I promise you, it will be worthwhile your time. Welcome to Mark Anderson.
How's it going, everyone? Always happy to chat about zero DT options and kind of share my experience. Pleasure to be here.
So let's get straight to the basics. What is zero DTE options trading and why should one even trade it?
Yeah, so zero DT options stands for 0 days to expiration, and they are options that are placed once the market opens at 9:30, and then they expire that same day at 4 p.m. Also, I would consider zero DT options specifically on the SPX index, and that basically means that these options are cash settled and don't settle into a futures contract. So if you were $500 in the money, your account would just basically be debited $500 for that position. So everything goes to zero at the end of the day at 4 p.m. and everything is zeroed out into a cash value like you started the day. Huge benefit of these is your ability to learn with them. And then also that they've gone 5 days a week. So your ability to compound has exponentially increased over time. And they're about half of all options traded as well.
And we will get into your tips for how to trade this. But first, a little bit about your personal story. You were a construction worker. Now you're a hedge fund manager. What happened?
I was, full of piss and vinegar in my early 20s, and I was just kind of not about working. I was a terrible employee. I kind of just looked around and didn't want the life that anyone had at work. And being in San Francisco, where I'm from, in Silicon Valley, I realized that the return on capital was significantly better than the return on skilled labor, even if you're a lawyer or a doctor or a professional engineer or something. So I wanted to get in that side of it. Nothing really made much sense to me, like why companies are valued at 100x sales, and people seem to just be tweeting on Twitter of what that is. And then I stumbled upon options. I was a kid at like 25 with a 100 grand account. I was like, oh, if I could do this, I could probably open a hedge fund. And I'd seen some people online that had done it. And I basically just did it every day for a couple of years. Now I'm here running a hedge fund and still learning as I go.
And how has that been going for you?
It's going quite good. Like, it's a system that scales. So that was always what brought it into me. Frankly, my actual acts of trading in a fund are almost nothing. I'd say I spend probably less than 5 minutes a day on it. There was thousands of hours of work to come up with the strategy and understanding that stuff. But basically now all I do is make content for kind of marketing purposes and work on the business of a fund. But in terms of trading, I probably trade less than 99% of people listening to this podcast.
And how would you describe your trading style?
I would say I'm running an ensemble approach, and I'm always looking at protecting against risk first. So to kind of let people know what an ensemble is, let's say you were trading a 45 days out strangle, classic tasty trade, you roll at 21 days. So if you traded that same strangle at 35 days, 21 days, 7 days, 1 day, and then 4 times through zero DT, the exact same mechanics, minus the rolling, we'd use a stop loss instead of that. That would be like a very simplified version of what an ensemble is, being that you can trade the same exact strategy by diversifying by time, which obviously would change all your Greeks and such. And therefore you are running a diversified portfolio just from running that at different times or days of the week and such.
So let's move to zero DTE, 0 days to expiration. Who is this trading style suitable for?
It could really be for anyone. You definitely need an account above 30 grand to avoid pattern day trading and get a little bit of wiggle room for any type of drawdowns. But I would actually say it's well catered towards many professionals because automation and back testing has come out that the trading does not need to take place during market hours. All of the work around being able to set that up has nothing to do when the stock market's open, since the instrument settles to cash and it's liquid and you know what the price is of everything. It's great for people with full-time jobs that have some side income, and you will get used to it pretty quick as long as you start small.
I challenge you for this video to come up with your 5 best tips to succeed with the zero DTE trading. So let's get started on those, shall we? Which would be the first one?
Buy a good backtesting software. I use Options Omega. I also do some custom backtests, but I end up importing the file in Options Omega to use it. And I would also subscribe to an automation service. The reason for this is that trading is a skill, and the actual act of placing your trades is a basically zero ROI activity. You're looking at something and you can make manual error. So by automating that, even if you may not be making money or it comes out to $300 a month, you've freed up all your time to basically learn. So imagine, you could pay someone to go to school and then you could actually work while you were at school. And that would be an activity where you're learning, while you're actually doing stuff as well. So I would say that everyone should automate so you can use the best use of your time learning to get better rather than manually making sure that you put in the right, trade on your thing and tracking in a spreadsheet.
You mentioned that you're using Option Omega for backtesting, but what are you using for automation?
So I'm using absolutely everything just to be kind of like a craft of what's out there. I do the majority of my trading on Interactive for the fun because that's kind of who we have to use. And I use Trade Automation Toolbox for that, as well as a small kind of custom signal thing built on Interactive's API. But I also use Trade Steward, Trade Whispers. I've also used Option Alpha, and I'm on Tradier, Tasty, Thinkorswim, Interactive Brokers, and TradeStation. So I'm in everything.
What is the learning curve to learn these type of tools for backtesting and automation? It sounds kind of complicated if you're not into it.
Yeah, I mean, I would say, like, depending on what your background is, it could be a little more confusing. If you have no idea what options are, it may take you a minute, but with an hour a day of effort, you could probably start trading in a month. And then I would see like no real problem with using them within 3 months. Whether they match your back test or your back test good is a different skill. But in terms of just using the automation, it's a little bit more difficult than buying a stock on Robinhood or something, but it's very gamified and anyone can figure it out in a month or two.
What will be your second tips?
My second tip would be you'll get further with others than by yourself. So, if you're using Option Omega and you're using an automation software, all those places have Discords. All those people have the exact same information. I can promise if you found something good, you didn't find something that no one else has found. And by basically getting different perspectives and viewpoints for other people, you will learn faster and you often get referred to other groups that you may kind of learn more as. And also when you're doing that, if you're willing to keep your ears open and be humble, a lot of people actually teach you stuff, even if they may not have as much experience. They could just have a unique viewpoint that could be that little light bulb that takes your trading to the next level. That's how I really progressed. And I went through everything. I did covered calls. I did leverage ETFs. I did the tasty trade method. I did, theta engine and systematic, like 90 days out. I looked at Zoom rooms in a group and charts and took trades on that. I proctored a trading group. I developed my own back testing, and now I run a fund. So I've kind of gone through the gambit of all of that, and you're going to get everywhere quicker with doing that. And that's something that I'd really challenge people to. It's never going to be the person that has a strategy that finds it first. It's going to be the person that can adapt the quickest, and people are going to be who helps you kind of adapt and get further along that way.
Is there one particular community you would recommend?
I prefer Discords in general because the way the information is conglomerated is much better to communicate and look at than Facebook or anything like that. In terms of courses, I really like Ron Berntino, Portfolio Margin Trading Tactics. Even though I don't trade portfolio margin, stuff like that, I think that's a really good options background. Obviously, the skill of backtesting and automation is important. Options Omega, Trade Steward, Trade Automation Toolbox, just to get those core down, because your ability to backtest, compare your results, and also be able to automate that correctively is always going to hold you back from your trading up top. You got to get those skills down before you kind of progress into more advanced things.
Let's move to tip number 3.
I would say set goals and expectations for your trading journey that reward progress and that are realistic. I know everyone's seen backtest on zero DT. You're like, I'm going to be a millionaire tomorrow trading double calendars or something. I've never really met people that do significantly over like 60% without a 20% drawdown. And anything when we start getting over a 20% drawdown, we could say it's basically luck, because if your data is a little off or the sequence is a little off, you get a 50% drawdown, and then you need to have twice the edge of what your intended back test is to ever get out of that. So I would almost consider that luck or excessive risk that doesn't really pan out from a math perspective. But I really think that everyone can do 25 to 30% a year with a 10% drawdown. I think that's very reasonable. Obviously, you can shoot a little above that, but for that as your goal, especially starting out in the first year or two.
But should the goal be particularly the results you want to achieve financially, or should one also set other goals for the trading?
Yeah. So I'm a big, I'll call it process-based goal. So like you want your goal to be 30% return with 10% drawdown. However, now you need to go back. So it's like, what are the things that'll ensure you do that? So it's going to be, you want to keep your wife and your girlfriend and have a good relationship with your kids. You're going to do this in less than 5 hours a week. And those 5 hours, you're going to get your automation set up on Trade Steward. You're going to get your back testing done on Options Omega. You're going to check it once a week. And then you're going to, find an accountability partner to check in with weekly that's trading something similar to you. And you're going to do this with 4 strategies. And your back test does that. And you're going to look for it along the way. So I'm real big with those processes that are tied to what that goal is. But I also think it's important to have a realistic goal, not, oh, I'm going to shoot for the stars and land on the moon. That's not how trading works. If you shoot for the stars and try to land on the moon and back testing, you're going to just lose your entire account.
And what you're saying is that the realistic goal for most people could be 25% return in a year, but being prepared for a drawdown of 10%.
Yeah. And also the way I kind of like show that is that's extremely reasonable because we're using like a little bit of leverage. And I think we all agree that options are overstated, especially on a shorter term basis. So by doing that, like the average return of the S&P in the last 15 years has been 15% with a 10% drawdown. So you can basically get a little bit better than the S&P returns with skipping out on the bad years. And that makes a huge difference over 5 to 10 years. And like I said, it may take you a while to get this going, but once you get it going, 5 hours a week, no problem.
And even 10% drawdown can be a bit frustrating for most traders.
Yeah. Another thing that I kind of like to base drawdowns on is there's something called the Ulcer Index. And just like quick overarching of what that is it basically looks at your drawdown and then it looks at the depth and speed to basically get back to even of that drawdown. So like how long did it take and then how quick did you get back to even? And that's a much better way of feeling that drawdown because you could be trading some strategy when you buy, long calls that only triggers 4 or 5 times a year. And you could be in that minus 10% drawdown for 9 months and you give up on that. But if you took 4 10% drawdowns throughout the course of the year, but none of them lasted more than 2 weeks and you always made progress back towards making money again, at least for me, mentally, that's easy. And I found the Ulcer Index is a good way to classify that from a numerical perspective.
And now I'm, of course, curious. What were your own results last year?
I did about 45%, and then I took about a 9% drawdown. So pretty good, but in line with what we're thinking. Also with doing that is like I run a lot of bought options as hedges, and all of my drawdown basically came from that. So that's also a little bit different thought process where, I can basically assure if the market were to gap down instantaneously or shut down, my account would still be fine through buying power use in those long hedges. What I'm mainly targeting in my trading is I want to get less than a 10% drawdown because 10% drawdown, we need an 11% gain to get back to even. And I always want to avoid that. And then anything basically above 20%, you're going to start to really benefit from compounding.
Let's move to tip number 4.
I would say work on the process that keeps your emotions out of trading. So
That's a tricky one. Huh?
Yeah. So if there's some trade that you feel compelled to look at your screen 20 times a day, you either need to set up a process where you can't look at your screen at all, like you're doing the 2-factor authentication on a separate phone, or you can't do it, or you should just drop that trade so you're not stressed out for 6 hours and you can just worry about it for half an hour and you trade something at the last part of the day. So instead of using up all this excess willpower of what you have to do and, telling yourself in the mirror that like you're this really mechanical person, just fit that in with whatever, lifestyle you had. Like I remember when I was trading a lot and I first started, I was working, and this was before I was automated, and I was on the West Coast. I used to trade a lot in the last hour of the day. I'd basically be in front of my computer for a half hour, and then I'd go on a half-hour walk, and I'd come back and it was done. And I'd leave my phone inside and the whole nine. And that was a pretty easy hour for me. Whereas looking at the whole day was just not something that I could really handle. So kind of, keeping your emotions out of trading, that you're not manually putting things in, but you're also setting yourself up to where you feel your emotions and you understand ways to set yourself up for success of not having those interfere with yourself.
This is easier said than done, isn't it, for most people?
I think it's actually very easy to do, but you still feel the emotion. I'm completely systematic. I really never deviate from what I'm doing. However, I feel like I'd like to deviate, or I look at tests and it's like, oh, I don't know if this works. So it's very easy not to get into it, but you're still going to feel it.
One part that has always fascinated me about options trading is this fight between the rational John and the emotional John. Of course, I know you should keep the emotions out of it. It is not always so easy, but I'm also fascinated by this self-discipline you can develop with this activity.
Yeah. I mean, at the end of the day, what I like to say is like, trading business like boring and smooth, mark like entertaining and new. So find something else to scratch that itch for entertaining and new, because that's not what your trading account wants.
Let's go to tip number 5.
Yeah, I would say size your portfolio for longevity and then go for that entire ensemble approach rather than just one magic trade. So no matter how good your strategy is, it's going to go in and out of favor. And mentally that's hard. And, sizing, if you're a little off and you only have one trade, can really start to work against you quickly. Whereas if you have several trades at a much smaller size, they're less likely to basically cluster and all hit the worst part at the worst time, which is unlike if you only had one strategy. And by doing that, it just keeps you in the game, because the largest edge in option trading is basically that we can compound. So keep on compounding at a small size, take some money off as you make it. I take about 20% of my profits every month, and just continue to do that in perpetuity and smash the profitability button as much as you can.
But a part of this is to keep an ensemble or a portfolio of different strategies that don't always work together.
Yeah. And like this can be done to, like, even with crazy examples. Like I give an example where it's like, if you hold cash, like a 60-40 bond portfolio or whatever, bonds have drastically underperformed the stock market for, the last 3 years. However, if you look at like a 100-year data set, a high yield bond has beaten the S&P over that period. So just because it hasn't been working, like by it holding its value and not having that downside over a long period of time, you're going to see the benefit of that. And unless you're starting out with $5 million and you're trying to get in and out, which a lot of people I think you want to do in options, the other part to that is the benefit of holding cash and making no money actually helps a lot and prevents drawdowns and keeps you alive, because ultimately, like, you have to keep smashing that probability button. And by having those several sources of trades, or even if you hold equities or bonds or cash, really helps your entire wealth out in a long-term perspective. And I would also say keeping a job also while you're trading.
How many different zero DTE strategies do you trade on a regular basis, and how have you kind of put them together?
So I run 18 currently.
18?
Yeah, I run 18. And I've put those together is I'm basically looking at just numbers and ratios. So I'm looking at my drawdown. I'm looking at my daily standard deviation, or how much my portfolio goes up and down on a day-to-day basis. And then how much return do I get for how much drawdown I take, which would be your MAR ratio. And I'm also looking at my Sortino ratio, which basically tells me how much I get paid per unit of risk. So I'm looking at all those, and how I've combined them is I just want them to be uncorrelated to one another. And there's also, patterns throughout the day. So for example, the market generally trends more from 1 to 3:30. there's a stronger trend. Anyone who's traded options can kind of see that during the last few hours of the day, power hour generally moves the market. So that's the best time to trade any trend trade. And then conversely, the hour or two before that is the worst time to trade trend. So your options would be trade twice as big from 1 to 3, or trade half as big from 1 to 3 and spread out the entries over the entire course of the day. So even though the entire course of the day underperforms that end of day, by combining all of them, you end up compounding more, making more money, and reducing your risk and having a better risk adjusted reward. So the sum of the parts is significantly. The example I would kind of give is like if anyone's married or has a girlfriend or has a wife, when you're by yourself and you take a hit, something's going on, you feel really lazy, they can kind of make up that slack when you guys are feeling at different energies. And then sometimes you all hit on the same kind of like lockstep at the same time. And that's when you really get forward in whatever progress you were going after.
So these are 5 very good tips. How would you sum up these tips in a brief way?
I would say number 1 is like optimize your time for learning, and then also so that your emotions are feeling and giving you a signal to rationally evaluate whatever those numbers are. And then also you have to understand that it is a process to learn all of this. It is doable to do it. A lot of people have, and you can really come from any background. I think that options trading in particular is the purest form of capitalism in the world. That means it's competitive and it's hard to do. But no matter what your background is, no matter where you're from, anyone is able to do this at a high level. And you will just continue to go up this chain. Like something I heard the other day is like the way to think of it is like money should be like air. If you think about it, you never even blink an eye and think about breathing, that it won't be there and the air won't be there. And that's essentially kind of the point you can get to when you really master, this option trading and 0DT where you're at. It's like you don't even think about the profit coming in. It's just there like air. You're just breathing each day, you're doing it, and then it basically becomes subconscious that it comes your way.
I want to end off with where people can learn more. And one place is obviously your YouTube channel. Tell us a little bit about what you try to achieve there.
Yeah, I mean, you can go to my YouTube channel, 0 Day Mark. I am basically trying to provide no BS free information to people so they can learn how to trade through my experience. I basically went from not knowing how to trade options at all, unemployed, to running a hedge fund. I went from a $100,000 account to a $10 million account in 2.5 years. I've gone through that whole journey. I kind of believe that you can help people solve their problems. Once you've solved that for yourself, most likely solve most problems where people are out there.
Are there other good sources you would recommend to learn about 0DTE trading?
Yeah, I think reading some books are good. So like all of the Ewan Sinclair stuff to just get a better understanding of options. It's like positional option trading. I also think The Psychology of Money is really good by Morgan Housel. So that's just kind of a good barometer of what it is. And I also think that business or just taking risk with any types of self-development, because it lets you know a lot more about yourself, even if that's just in a relationship, is also embracing kind of taking that risk in life. So you'll know how you respond to other types of trading. And that's ultimately the best teacher.
Thank you very much. And I would, of course, also mention that we have a number of videos about 0DTE trading on this YouTube channel, and you will find a couple of them popping up on the screen. Like and subscribe if you enjoyed this video. Thank you very much for joining and sharing your knowledge, Mark.
Of course.